Hi, I'm Ross from Coon Smith 150 Group Property Accountants, and we're just going to look at some simple numbers today. How do these interest deductions work? What effect is that going to have? And yeah, a question I saw on a forum, what happens if I reduce the rent? What would that do? Would that help with the interest deduction? So we'll run through some numbers and you'll see what the outcome is. So we've got a property, say you're getting rent $32,000. You've got a $600,000 mortgage, and yeah, you're paying 16,800 off interest. You've got some other expenses, your accounting, your insurance, your property management, your rates, your travel, your repairs, all your other things. You're left with a 3,200 cash profit. You've got a little bit of depreciation, say a little bit of carpets, curtains, dishwasher, stove, heat pumps that you're depreciating, left with a $1,700 taxable profit. You're paying tax at 33%, $561. You're left cash flow after tax, and that is interest only. So yeah, all these figures are interest only, $2,639 or $51 a week. Great. So on interest only, it's making a little bit of money, you're all happy. And then these new rules have come in. Maybe you purchased this property in April or May this year, so you're going to have no interest from the 1st of October. So still got your 32,000 rent. You won't be allowed your interest deduction. So yeah, other expenses still there, $12,000. So your taxable profit is actually going to be the 32,000 less the 12 less the 1,500. You've got 18,500. So your tax bill has jumped from $561 to $6,000. So yeah, you've got suddenly $5,544 of extra tax to pay per year. So your cash flow after tax, you're still making your $3,200, but now you're paying $6,100 in tax. You're left with minus $2,905 or losing $55 per week, $56 per week. So that's what's happening with the new interest rules. And that's obviously once they're fully kicking in, that's if you weren't allowed the interest deduction from the 1st of October. So if you have existing properties, 26th of March 21 or before, you're still going to get the interest, but it's going to get phased out over the next 4 years. So this will slowly kick in, your tax will slowly go up, but you're still going to be left with this position long term. So with this outcome here, we're left, yeah, you've got minus 2,905. So what happens if we reduce the rent? So what happens if we went, oh, we don't want to pay 6,000 in tax. So what happens if we reduced our rent by $12,000 down to 20,000? What happens then? So obviously we've got a huge cash loss, 20,000 in, and we've still got our 28,000 coming out. So we're 8,800 negative. We are going to have depreciation still, get a big tax bill. Let's say this is our only property, so it's ring fenced. We don't get any tax back. We're paying no tax, and yeah, we're minus 8,800. So we're losing 169 a week. With the new rules, we've got 20,000 income, 12,000 expenses, 1,500 depreciation. We're still making a taxable profit. So even though we're losing 8,800, we've still got 2,000 tax to pay. We would be 10,000 negative. So charging a whole lot rent, that doesn't work. Yes, you might be able to try and reduce your tax bill a little bit, but you're basically giving up $3 to save $1 in tax. So in this case, you're giving up $12,000. You're saving $4,000 in tax, but yeah, you are the other $8,000 worse off. So if you'd done this, you'd reduce the rent by 12,000, you'd be 11,000 loss. And if we go back to what we had before, it was 3,000. So yeah, reducing the rent does not work. That's not the way to do it. Yes, it reduces your tax bill, but you're going to be a whole lot more interest that you're going to be short of. So like I said, if we reduce that, yeah, we went down to 11,000 negative. with that. So yeah, just be really careful with that and think that through, that's not your best outcome for you. And yeah, realistically, the best outcome is to maximize your profit, maximize your tax, and then look at other smarter things. How can you still get the interest deductions? Is there smarter ways that you can structure? Is there ways that we can structure it so you can get the interest deduction? You've done quite a few videos in the past, done webinar that's still available online at the moment as well. So yeah, think about those sort of things. Don't think about dropping the rent. So hopefully you've enjoyed that. And yeah, I'll put a link at the bottom, which has got a few of our videos and other things on it. Thanks a lot. Bye.